Welcome to Nano Forex Corp, a professional forex trade training and service institution. The details can be found at www.nanoforescorp.com, Hyderabad, India. Myself, Dr. Khaja, I would like to welcome to Global Online Forex Trading. Goals. To start a business or a profession, we set certain goals and aims to achieve on that. Now, how many of you really would like to become the business tycoons of this dynamic world? And how many of you would like to be the best professionals? And how many of you would like to become both of the above? And how many of you think your goals can fulfill your financial freedom? These are the questions must be asked to start any business or a profession. Now, could you identify a trade or a business that doesn't need an office, a shop, a strategic location, employees, advertisement, infrastructure, and establishment cost? Without this, we cannot start any business. But with online forex, it is online global forex. It doesn't need all these things. We can start up a business as long as you know trading. Then what is global online forex? It is simply buying and selling of currencies. Today, online forex is the hottest non-stop cash market with limitless opportunities. It is robust and recession-free international marketplace where foreign currencies are continually and simultaneously bought and sold across local and global markets. The most interesting in online forex is that anyone from anywhere can participate through internet. Most of the business runs among top international banks where more than $4 trillion are traded daily within 24 hours. Why is forex? Today, we have many online business opportunities such as stocks, futures, commodities, equities, and so on. Then why is the forex? Because it is the largest financial market on the planet. Every day, over $4 trillion are traded. It is equal to 2 lakh crores of rupees daily. Comparatively, it is 30 times greater than total stock markets of the world. It has great liquidity and higher leverage. Interestingly, it offers 24 hours flexible market to participate. The history of forex. When was the forex started? The Bretton Woods Agreement was set up in 1944, aimed at installing international monetary stability. During the end of Second World War, 780 delegates from 44 allied nations deliberated international financial and business regulations at United Nations Summit. That eventually evolved as IMF, International Monetary Fund, and IBRD, International Bank for Reconstruction and Development. Today, they are World Bank Group. At this time, most of the industrialized nations, they agreed to exchange their currencies freely with US dollar. Now US dollar is one side and basket of major industrialized currencies on one side. At the time, $1 was equal to 0.04 ounce of gold. But by 1970s, the United States of America, at the time the President Nixon, who was unilaterally breaking the treaty and said the dollar was no more convertible with the gold. Then from that time, US dollar is only a reserve currency, and the currencies of major industrialized nations became more freely floating, controlled mainly by the forces of supply and demand, which acted in the foreign exchange market. A decade ago, only big people with millions of dollars used to have this trade. Therefore, many people are not aware, because to participate in foreign market, you should have a lot of money. But due to technology made possible to have forex trade today at home with minimum investment of $1. Forex volumes. To start a business, we have to see how long and how big it's going to be. Now you see, in April 2004, average daily volume used to be 1.9 trillion US dollars, which is higher than 11 average volumes of all world stock exchanges together. At the time it was 167 billion US dollars. The 40 average volumes of New York Stock Exchange, the biggest stock exchange in the world, at the time it was about 46 billion US dollars. And if you compare the whole world population, if you put 300 US dollar per head, that much of total money is being traded in foreign exchange market daily. By April 2007, the average daily volume increased to 3.2 trillion US dollar, almost 70% higher than in April 3. Means almost 70% increase within 3 years. The most important markets, US, UK, Japan, and more than half of the forex volume is done in UK and USA. The highest activity is detected in period of different markets working hours in reference. This source of information from Bank for International Settlements BIS updates every 3 years. Now what are the major currencies? Generally we trade USD, a US dollar, Euro, common European currency, GBP, pound sterling or pound, Great British pound, sterling or cable, CHF, Swiss franc or Swissy, JPY, Japanese yen, CAD, Canadian dollar, AUD, Australian dollar or Aussie, NZ, New Zealand dollar or Kiwi. Now forex market participant. If the more than $4 trillion are being traded, definitely we think who is the participants in this foreign exchange market. The most of the commercial banks across the globe, brokers, dealers, the US Federal Reserve System, Bank of Japan, European Central Bank, ECB, and Bank of England, and so on, and many other financial and business corporates. All these people participate in foreign exchange. There are many reasons to like forex. Because in the forex there is no middleman. Buy and sell programs do not control the market. Analysts and brokerage firms are less likely influence the market, whereas in the stock market a group of individuals or a group of companies, it is possible to manipulate the stock market prices, whereas in foreign exchange it is very difficult because the market is so enormous and which runs 24 hours. You can see the stocks of any country, the hundreds and thousands of stocks are being listed, whereas the currencies just 4 or 5 major pairs. To buying a stock is quite difficult, because before buying a stock we should have to analyze about the product and company, when it was started, whether it was regulated or not, and who is the CEO, what will be its performance, and so on. And moreover, trusting a stock is quite difficult. We don't know its survival and how long it is. Whereas for the foreign currencies, it is quite simple because the currency is guaranteed by a country. So trusting a country is quite simple than trusting a stock as it belongs to a group of individuals or a group of companies. In foreign exchange market, there is high leverage and 24 hours flexible market opportunities. It opens to world citizens. It means any person from any part of the world can participate in foreign exchange market. But whereas in stock market, it is difficult. If you want to buy stock from a country, you must be citizen or a resident of that country. Unless otherwise, sometimes it is difficult to buy stock of that country. Whereas in foreign exchange market, you are freedom to leave any part of the globe and you can buy any pair of currencies. It access from anywhere through internet. Now let us have a comparison. Forex versus stock. Advantages. You can see that Forex offers 24 hours trading opportunity but not the stocks. Commission free trading in Forex whereas stock is limited. Instant execution of market orders possible in Forex, limited in stocks. Short selling without upstick is possible in Forex but not in stocks. If you compare with the Forex versus futures, also you can find the advantages: 24 hours trading, commission free trading, up to 700% leverage, and price certainty, guaranteed limited risk, liquidity. All these things can form in Forex whereas limited in stock, in futures. Now the most important question, how to become successful? You can see this diagram. Successful trader should have